In this video, traders, we are going to look at who will make the most money during the coronavirus volatility. Stay tuned. Hey traders, warm welcome to you. All right, so which traders are going to do the best out of this coronavirus volatility, in my opinion? Now, before I start this video, I have done another video, and I want to make it clear about this before we get going, is that, if you are a beginner trader, because I appreciate that we've got people from all experience levels here. There's a complete broad spectrum of people who kind of watch this channel, watch other people, watch other videos, etc. It doesn't, you don't have to trade this environment to get benefit from it. If you watch it, you take notes, you learn, you will have a massive experience that you can draw on later, even if you don't put a penny of risk caps in the markets. And then for many people, that is the most sensible thing to do in these conditions, is to just watch, learn, and enjoy the show. There's lots of stuff going on. There's so much going on. It's an exciting time to be a trader, putting aside, of course, the health aspect of the coronavirus, etc. From a pure trading perspective, there's lots going on, and it's what we live for. We live for volatility, right? So that's one of the things. However, if you've got experience in the market, you're putting some money to work, these are the best conditions, or some of the best conditions we will ever have. And so it's our job to take advantage of it as best we can, and to try to really extract as much profit as we can from the market. So I just want to say that, guys, because I see so many traders standing up and saying, hey, well, everyone's killing it in this market and blah, blah, blah. And I think that's a little bit dangerous. Yes, if you're experienced, it's a good time to be a trader, no doubt about it. But there's a lot of people out there who this is the worst time for them to trade. And I just want to make that clear. It's not a problem if you sit and watch and just learn and take notes and come back at it when everything's calmed down. There's no need to be a hero in this. And it frustrates me a little bit when I do see people saying, oh, you should be in the market now. If you're not trading this, you're not killing it in this market environment, and you shouldn't be a trader. Listen, if you're experienced, fine. You should be pressing. You should be really extracting as much as you can. But if you're not, anyway, you get the point, guys. I've gone on about that. I don't need to make that point anymore. Okay. Traders who focus or trade a very small number of markets. I'm seeing this pattern. Traders who are really winning at this, traders who are really doing well. And I've said this kind of before this thing kicked off, guys, and also something I've mentioned very early on in my program. I say, hey, listen, focus, bring that focus right in, and it's happening right now. If you're focusing on a small number of markets, you are going to have the opportunity to do much, much better than if you're watching too many stuff. Now listen, I'm not saying don't be informed and don't be interested in what crude oil's doing, or what gold's doing, or silver's doing, or orange juice is doing, or this and that. All these things that are moving and are quite interesting little mini markets on their own, that's fine, but you focus on what you're doing. If you're trading FTSE futures, you trade FTSE futures. If you're trading a couple of tech stocks, you trade those. If you're trading UK retail stocks, a basket of 5 of those, you stick to those. If you're trading yen pairs, you stick to those. The point is, yes, it's all very well looking all this other stuff out of curiosity, but it should have no bearing on the decision-making process, unless of course you've got setups and strategies that rely on those correlations. That's different. The point is, there's so much going on that the traders that are going to lose in this environment are the one that jumps to gold. He jumps to silver, he then jumps to a tech stock, he then jumps to bonds, he then jumps to VIX ETF, and that just gets you nowhere. The chances of you coming out of this with a profit in that are just slim, because you're trading so much stuff. It's very hard to keep a track of it, very hard to get in tune. And the traders that are winning, and the traders that will come out better, are the ones that are laser focused a small number of markets, because the opportunity is there. You don't need to have all the markets. The thing, guys, is hold on to the right trades longer. So because we're having these extended runs, and I've actually done a video about this, which may well be up now. If it's not already, hit the subscribe button and make sure you're notified when it comes up. And it will talk a little bit about the difference between when to know how to, we never know, of course we don't, but holding a trade versus just banking the short-term profit. But the point here with this is that when you're on the end of a winner and it's really running, you've got to extract as much juice from that deal as you possibly can. And those are the traders that are going to do well out of this environment. It's 1 or 2 trades per month, maybe per week if you're day trading, but that kind of order of magnitude that will really boost the P&L, because they're the ones that, you know, really got on the end of. You've managed to add some size into it, you've managed to kind of push the throttle down a little bit more, really squeeze as much as you can out of it, and those are the ones that you've got conviction with, you've got a good entry with, you've got good risk management with, and you're really holding, and those are the ones that are really going to make the difference in the bottom line at the end of all this. Third thing, guys, is happy to cut trades quickly. So the environment is changing very quickly. News flow is impacting the market hugely, and so what might be a nice technical structure on day 1 might have just been blown out of the water by something news that came out on day 2. Now, does that mean that it might set up again on day 3 or day 4? No, of course. It means that it may well set up then, but you need to be able to cut it and go, right, I just got caught out by the news on that. There was my stop, I'm out of the deal. Right now it's setting up again, it's at a different level, the metrics are slightly different, but the play is still the same. Let me take it again. And so, you know, you've got the ability to still cut stuff just in case you get caught on stuff, just in case the price action changes, supply demand shifts, that kind of stuff. But then again, being able to go back in. So not sitting with stubborn trades. People are going to sit with stubborn trades in this are going to have a very hard time coming out profitable. The fourth thing I've got, guys, is don't look for the home run all the time. So yes, there's a fine line between knowing when you're making a cash flow type of trade, and it's actually not to say, hey, this is purely from a move to this point, I'm going to take the money off the table, look for the next one, versus I want to try to position for a longer term play, a longer term move, and that's the kind of the right trade holding longer. Knowing the difference between the two and how to position is going to really kind of separate people who are, you know, going to make some good money out of these conditions and those who are not. The other thing is focus on account growth, not winning trades. Sounds a bit crazy, right? We need winning trades, but you know, if you're focusing on not just the winners, but obviously how much you're losing on the losers. And yes, we go back to the age-old saying, guys, and I know it gets a little bit dull. I appreciate it. It's like cut the losers short, ride the winners. But it's something that has to be the cornerstone of everything we do in trading. It just makes no sense if we're making these, you know, brilliant and most beautiful winners, and then we're just losing and losing and losing, undoing it all. We're just spinning our wheels and get frustrated, and we end up getting wiped out because we do something stupid. So, you know, bearing that in mind and go, okay, I'm focusing on account growth. So I'm not just looking for my winning trades. Of course I want winning trades. Of course I want those winning trades that are just gems and are sized up and they just go in my direction and I can trail them. Of course, and that's something we look for here. But also, you know, keeping a tight grip on the losses, keeping a tight grip on your emotional state when you're trading, keeping a tight grip on the amount of trades you're doing, the amount of size you're taking, all these things. And that is keeping a focus on account growth rather than the next winning trade. Is this in my best long-term interest as a trader to make this decision and take this action? If the answer to that is no, then you need to reevaluate. If the answer to that is yes, then great, go ahead, pull the trigger, take the deal, put the order in, whatever you're doing, and that will hold you in a much better stead than constantly looking for the next trade, the next trade, the next trade, the next trade. All right, guys, take care. If you're playing this market, great environment. If you're not, fine, loads of stuff to learn, but keep your risk managed. Bye-bye.